we can potentially hold for multiple months. And then as it continues to, no way I just got on live for YouTube. Yeah, but there's no way that, that we're going to miss this move. So if we can catch this at the very top, we can get a prime entry. Then we can milk this thing all the way to the downside on the way down. And then as it drops, we can look for retests and more entries, retests and more entries. And that's what we've been doing all year. So every single one of these moves, whether it's the actual touch off the daily zone, or whether it's the pullback, or even these minor pullbacks here where we catch these shorts, or even these retests, we've been able to catch a lot of great quality moves on Euro USD just by consistently showing up, monitoring it to see if it's reversing yet, and then acting on it once it's ready. So very excited to catch that swing trade with you guys. EU came within 2 pips of the fib extension. That'll happen. Let's try that out real quick. I guess it depends on where you drew it from, right? So if you measure the most recent impulse, then it hit the extension level perfectly at -27, and then now it's kind of sitting above the previous highs. If you drew it all the way from down here, then yeah, it missed. So that's why, like, it's not about which one is correct, because everyone's always asking me, well, Roy, where should I draw my fib from? When it comes to trading, you're trying to layer confirmations. So it's not an or kind of question, it's more of an and kind of question. You draw the fibs from both. So when I draw it all the way from the extreme, from the bottom to the top right here, I notice that the 61 and the 78, they're all lining up with price action. These wicks are not a coincidence, people. That 78 wick is not a coincidence. It's not like price got to this one very specific place and rejected off a fucking hairline. That's not a coincidence. And so a lot of people are still skeptical about Fibonacci sequences. What I would encourage you to do is to stop being skeptical and to start fucking studying, because it's going to change your game. And it really doesn't take that long to start understanding fibs once you start to practice with them. So the first thing is I drew this fib and it's accurate and it lines up with price action. The only thing I don't like is that we never had a proper rejection of this -27. I drew a second fib that's local. So from this most recent drop, we have some zones that layer on top of each other, and we have some zones that don't really matter that much. The -27 extension got respected. Down here, we have the 38 and the 38 lined up right on top of each other. So this would be a pretty good zone, both 38 fibs to get hit before we continue. I also see that we have the 61 and the 78 down here. That's another high impact zone. So for me, what I like to do is, first things first, I have price action drawn up. So I have these areas of support, turn, resistance, and I'm kind of marking this thing off. But then I also see where are the most confirmations layered on top of each other. So if the 78% fib off the larger time frame is here, and the 61 fib on the smaller time frame is here, that means the high impact zone. So my first high impact zone is going to be the 38. That's where I'm going to expect a pullback. And the second high impact zone is going to be the 78 and 61 right here. And that's where I'm going to expect a pullback. So those are the areas I use to figure out my targets. So it's going to be my first target if I short it. This will be my second target, third target, and then the extension levels, of course. All right, hopefully that makes sense. UJ seems to be doing pretty good right now. I'm very excited to see how this daily candle closes. Let me explain a concept before we go through, because I know a lot of people are going to have questions. Oh, hey, yo, Matt Chart's in the house. Matt Chart's, let me send you the Zoom. I'm going to send you the Zoom link on, what's it called? On IG if you want to hop on, brother. I'm going to DM you the private Zoom link, because we have the Chart Addicts members in here so they can interact, ask questions, unmute, and all this other stuff. Of course, guys, if you haven't seen our podcast with Matt Charts, it's incredibly insightful. I highly recommend you guys check it out. Matt Charts, very mature perspective, a lot of honesty, a lot of just straightforwardness. I think it was an incredible conversation. Highly recommend you guys check that out. Okay, but let me explain a quick concept. So the majority of the month, currency pairs and other instruments are trending. So you're going to have trends going up. You can have trends going down. Towards the middle of the month, and like you guys can also look at this on a weekly perspective. The beginning of the week could be trending in a specific direction. The middle of the week could have a reversal or a pullback. Then the end of the week could have a trend. And so understanding where you are in this overall cycle is very crucial. If you're in one of these areas here and you're guessing buying, selling, the point of these areas is called accumulation. Basically, it's accumulating retail orders that are losing just based off of the fact that people are guessing directions because you have no clear confirmation yet. So when we're in one of these periods, which we're in right now, and these typically happen either in the middle of the month or towards the end of the month, right before the monthly candle closes, do not overtrade these areas. You will get smacked and break even a few times. Your stop loss will get hit before it moves. And there's going to be a ton of irregularities in market price around those areas. So a perfect example of this, let me show you guys this on Nasdaq. The way I've split up my Nasdaq chart is based on a weekly range that we're in. This is very straightforward. If you guys are a Chart Addicts member or if you've gone through the Chart Addicts program, you'll understand that the way I look at markets is in terms of discounts and premiums, but really I just want to put myself in the shoes of the market makers, the people who control the prices and who are incentivized to move prices up and down. Based on their perspective, they want to buy at discounted prices and they want to sell at premium prices. Yep. So the market makers are incentivized to take money from retail traders so that they can continue to run the game. And so what they do is they create patterns in the market that incentivize retail traders to execute orders, okay, with tight stops or wide stops, whatever it is. Then they're going to trap price, which is why you see so many of these wicks, so many of these areas where the market goes sideways and then it wicks down. This is not a coincidence. This is the market trying to incentivize traders to go to multiple directions or just to grab liquidity before it moves. So you start to realize that this is the market makers arena and we're here visiting. And so we need to understand their perspective and how they move price. So you guys know I'm looking at my premium prices up here, my discounted price is right here, my secondary support is here, and my secondary resistance is right here. We've already hit that top supply zone, and now we're sort of waiting at this 11,450. So let's look at historical precedents and see what's happened in the past. When price was here at the exact same area 3 weeks ago, the market made a double top rejection. We ended up falling straight through this resistance level at 470. We retested it on the smaller time frames, on the 1 hour, and then we had a massive drop. So that's why I'm expecting a pullback to this level of 11,470. And if we hold this zone right here, then we can continue to short this all the way down to the 11,000 range. All right, so very straightforward. The way I've kind of sectioned this off is by the weeklies, just so we can see how every week moves, because a lot of people don't keep perspective or context in mind when they're trading. A lot of people do this. Who's done this? Let me know in the chat who does this. Get straight to the 4 hour, get straight to the 1 hour, and then just get monomaniacally focused on small context, like this local price action, versus looking at the bigger picture. Who's ever been caught doing that? Or who's ever gotten stuck doing that, where you're only looking at smaller time frames, or even maybe let's say 4 hour time frames, but you're only looking at local price action. Now, local price action is very important because you can tell like the lows are getting lower, but price is closing above. There's some context here, but not anywhere close to how much context you can get by zooming out and getting a 4 or 5 week view like this. So let me explain a quick trick that I use for NASDAQ and how I look at this, because we still have a little bit of time before this thing moves. The market just opened. It's the 9:30 market open, but we have another 30 or 45 minutes to take a trade. So let me explain some context here in the meantime, so you guys are more prepared. When the market reaches one of these top supply levels, or even one of these like secondary resistances, the most likely place that you can take profit is the next black line. So if you trade it from one black line, you can take it to the next black line pretty effectively. Now, every once in a while, you'll get halfway there or 3/4 of the way there, and then the market's going to shoot back up. But since the market hit this zone and we have not hit the 11,000 target, that's why I'm so adamant about this zone getting hit. Because I know that most times when the market hits this black line, the next move is going to be to the downside to the next black line. And so I'm not doing guesswork. What I'm doing is I'm looking at the historical context and I'm saying, what is the most likely scenario that's going to happen based on what has historically happened? The markets are creatures of habit. And so basically they'll basically look at areas where they've bought and sold in the past, and they'll try to move price at similar areas. Obviously, they'll do a bunch of manipulative moves while it's there, because if it's too obvious, we'd all make money. Plain and simple. Let's look at this on a weekly perspective, and then we'll get straight to local price action. 4 weeks ago, and there's two main types of I want to say like anatomies of the weekly range of Nasdaq. Here's the first one. You have a consolidative beginning of the week. You have a choppy middle where the market is going to fake to the downside to fake out early sellers and fake to the upside to fake out early buyers. And then the end of the week, you'll get a trend. So you guys understand that there's a consolidative period, there's a whipsaw, and then there's a trend. The second type of anatomy is a very clear price action move early in the week, a midweek reversal or midweek consolidation, and then end of the week, you get a drop. This is what I just explained earlier. This is more of a Wyckoff sort of price action. You have a markup, you have a distribution, and a mark back down. Now, 3 weeks ago was a little bit more akin to the end of September price action. So you have a choppy beginning of the week. You have fake out of early buyers, fake out of early sellers, and then a trend at the end of the week. And again, last week was more akin to the beginning of October, where you have a very clear price action in the middle, a pullback in the middle of the week, and then a continuation of the trend at the end of the week. So same thing as this, trend, reversal, trend. This week is a little bit more akin to like the choppy ones, where you have a very choppy beginning of the week, and then in the middle, you're going to have some kind of move to both directions. Then towards the end of the week, we might have a sell-off. All right, or this could go the other way around. We could shoot up today, end up dropping, and then come back up later in the week. So by understanding this, I know that the choppy part is already done. And by looking at these contexts, if you stick to trading the highs for sells and the lows for buys, you'll generally do pretty well. And so that's what I'm going to do. I'm going to wait for a pullback. I'm going to short this thing high. I'm going to wait for it to hit this level. I'm going to take all my part. I'm going to take like 80% off the table because the trade's basically done at that point. If it keeps dropping to the zone, that's great. I'll take the rest of my profits. I want to see a fake out and a break back in, and then we can go long at the bottom of the range and do this all over again. I'll be completely honest, based on the news, I'm bearish on stocks in the long term. And so I'm not going to be buying it up at the bottom, but looking for a retest for shorts is definitely going to be the ideal today. Now, with that being said, let me know, put a 1 in the chat if this makes sense, if everybody understands what we're looking at on NASDAQ, and if it's pretty clear. So Roy, I'm feeling bearish on NASDAQ. Darren, why are you on the YouTube, bro? You know you got access to the Zoom call, right? Oh boy, you got a whole membership. My boy's a VIP member at Chart Addicts. Same with you, Frenchie, bro. What's everybody doing? Did you guys get lost? He said 2 weeks in a row. Let's make it 3. Just playing. Good morning, Roy. And thank you for everything you're sharing. Oh, good stuff. Oh, you're talking about that old joke, the first question I asked, which is who's ever been caught doing that mistake? I got to read these a little bit faster. Same for U30, right? What do you mean the choppy part? Are you going live for November 2nd? Are you talking about the Federal Reserve meeting or what? What November 2nd? People, I'm moving to Miami. Let me know in the chats if you guys are in Miami as well. I'll be there on Tuesday. Tuesday, I'm moving to Miami. We're getting prepped for FX Summit 2023. Ladies and gentlemen, if you haven't pre-ordered your tickets, I highly recommend it. Actually, I would hold, okay, real secret. I would hold off until the first 2 weeks of November. We're going to do a promotional opportunity for the first 2 weeks where you can get your tickets at half off. Just letting you guys know. The next 2 weeks are going to be huge. Christian, I got you down, bro. So as soon as I go down, I want to put together a kind of like a get together for all the traders. Let's see if we can go do something fun, grab a drink, go to do bowling, like fucking random shit. Just fucking, you know what I'm talking about, right? Just like random fucking social activities. Said, I'm moving to that area as well. When are you moving there, Chase? I'm going to be in that Sunny Isles area. Sam Huncho said, I'm in sells for NAS. I'm still waiting for that pullback, honestly. I know we might miss it. Here's the previous support level. We've already had this minor rejection here. So we could just drop. But here's the way I'm thinking about this. This is the previous swing high. And this is the previous swing low. So if you just fib this from top to bottom, we hit the 61, but I still think that like For Nasdaq, the 61 has always been a trap for me. It's always been an entry that's too early. The market will reject like this and then come right back up to the 78 or the 88.6 before making a real drop. So I'm going to be a bit patient with this. If we engulf the previous candle, then we can actually short from this 38 zone. All right. This is going to be shorter than a normal stream just because I'm in the middle of the move and just sort of trying to, juggle a lot of things. We are fixing the Enigma app. I know that we haven't sent many signals because the markets have been wonky, but we're really, really focused on fixing the app, creating a lot size calculator, creating some educational materials on the Enigma app. So we've been launching that. Chart Addicts, you guys are going to have your own app very soon. So you'll be able to schedule coaching calls, get on, access these calls, access the recordings, access the educational material, access all like the new videos that we're going to be doing, the educational content straight from your phone. And so those should be out in the next week and a half. It's just been taking a lot of time working with developers and all this other stuff. So now I'm going to give it a second to pull back. It looks like we're already starting to engulf, but we haven't engulfed it yet. Once we engulf, I'm going to measure this candle, this more local candle. I say once we engulf, if we engulf. I'm going to measure that local candle. I'm going to find the 78 and the 88 fib, and then we'll basically just be able to wait for a pullback and then short it from a much better level. So let's give this a second, see if we get a pullback to this 11,450, 11,470 range. If we don't, then we can get a little bit creative on the entries or just let it go. There's nothing wrong with letting it go. EU is still rejecting. Not too happy about this, but actually, I don't really give a fuck, honestly. I'm kind of indifferent about it. Let me specify here. I'm indifferent about the direction. However, I do want the dollar to continue bullish so we can keep trading this trend. And I think that the fundamentals support the dollar continuing bullish. So if we look at this, there's two main reasons that the dollar is acting, that the dollar's been bullish this entire time. It's because of a lack of supply, and it's also because of an increase in demand. When everyone's currencies are going to shit, people want to hold more dollars, or people want to transact in dollars, whether it's to trade oil or almost any other commodity. 72% of all global trade is settled in US dollars. So the dollar is the most dominant currency on the market. So when everybody's rushing to go get dollars because their local stocks are not yielding, the bonds are becoming way too risky, and people want to get into cash, that's when everybody tried to get into dollars. At the same time, they were pulling it out of the markets. So there's an imbalance of a shortage of supply and an overabundance of demand. What's happening now is that the demand for the dollars is starting to go down a little bit, not by much. Every developing country in the world relies on dollars to give their local currency value. So you can take like the Turkish lira or the Russian ruble or anything else. If they don't hold in their central bank, if they don't hold strategic FX reserves, which is like you're holding other people's currencies, your currency doesn't have value. And especially you have to have dollars in order to really give your local currency value. So everyone needs dollars. The demand is still there, but the supply is getting lower and lower because they're taking it out of the market. And so that's been going up for a while. Now the supply is starting to get a bit more abundant because people aren't trying to get into cash as aggressively. Now that stocks have crashed, now that bonds are in the dirt, now that real estate's about to take a hit and cryptos are in the dirt, people want to start moving out of cash into some risk assets. Maybe not yet, maybe over the next 6 months, but that's kind of the playbook. So when you see a lot of people get out of the dollar, when you see the dollar's value crash, my phrase is, and I want you guys to kind of take this away from these calls, is hashtag FTM. Follow the money. It's really easy for market makers to you guys know that street trick in New York where they put the ball under one of the cups and they just move them around real quick and you can't tell which way the ball is. And you pick the right one and it's just like the ball disappeared. That's what the market makers do with currency, with sentiment. So you'll see everybody kind of jump out of the DXY. So let's go to the different currencies and the different instruments. Are people buying stocks with these new dollars? Or are they dumping dollars to buy stocks? Well, no, because the stock market is behaving bearish at the moment. So that's not it. Okay, where is the money going? I see US 30 is going up, but Nasdaq is still pretty weak. I see that the Japanese yen is going up. I see that Bitcoin has had a pretty good rise. And let's look at oil. And I see oil is starting to come up too. Okay, so all in all, we have a pretty decent idea of where the money went. So the dollar's been dropping, but oil prices are up, Bitcoin is up, and the Japanese yen is up. So people are exiting the dollar for cash and they're starting to get into these undervalued investments. So if people think that that oil is going to keep going up because of the Russian oil crisis and because of the recession that's coming, they're going to want to buy up oil now at these cheap prices. And so I think that people are starting to, the world is starting to get moving again. Nobody dumps cash unless it's time for the market to turn around. All right. So that's what we're looking at here. Is this a genuine turnaround or a pullback? Once we can identify that on the dollar, let me know. I'm gonna let you guys answer all my questions today. I'm gonna let you guys just do all the work today because I'm feeling lazy. The DXY is dropping. Okay. There's two options here. This is either a minor pullback and we continue bullish, or this thing breaks through. If it's a minor pullback and this thing's going to continue bullish, what instruments can we trade or bet on to take advantage of the dollar going up? I'm gonna let you guys answer this so we make sure that we're growing here. How do I watch this shit live? Oh, there it is. Said love from India. I love all of our Indian followers, everybody who watches. Love you guys. Thank you guys for your support from all the way overseas. Said VA to Miami, Brandon. I'm gonna see you at the next convention, brother. He said, I do, bro. Haha, but I got a screencast on my TV. I can't do it on Zoom. All right, I'm geeking. Yeah, I'm bearish on NAS. Hopefully that answered your question. So what trades can we take advantage? And don't just tell me the pair, but tell me like what can we look to take advantage of? Like, are we going to buy UJ? Are we going to sell UJ? My boy said USS JPY. That sounds like the most lit boat ever. Said, yeah, the Fed meeting. So I'm actually going to be in Florida. I should be able to. Yeah. I thought the Fed meeting was on the 1st, people. Stop fucking with me. November 1st and 2nd. Ooh, you're right. I thought it was the 1st, honestly. Oh, I go to handy dandy Forex Factory, which I didn't do this morning. This is typically how I start the day. Heavy USD news this morning, by the way, guys. Forgot to let everybody know. GDP came out higher than expected, which is pretty impressive. You know, we've been on a pretty weak track here. We went 2 consecutive quarters of negative GDP growth. This is actually pretty important print here. Huh. Damn, guys. This is really good. So the whole recession talk that we've been talking about was that we had the first quarter of the month. Fiscal quarters are 3 months out of the year. So 3 months, 3 months, 3 months, 3 months. Q1 and Q2 both came out negative. So 2 consecutive back-to-back quarters of negative GDP growth indicates that we're in a recession. Not if you ask the Treasury, because they're some lying snakes, but everybody else who's an economist will agree that 2 negative consecutive quarters of GDP is a recession. And now we just finally dipped our head back above the water. Q3 came up 2.6% GDP growth. Now that's not that impressive because when you're at like 0 and you start to move up a little bit, it kind of looks significant, but it's really not that significant. Core durable goods orders came down, so people are buying less stuff, basically. Durable goods orders came down as well. So whenever you guys see core, it just includes something, or it excludes something. So you guys look at like the core durable goods, it excludes transportation items. Core CPI excludes food and energy, whereas headline CPI includes all the costs. Most of us, we spend most of our money on a mortgage or rent, and then on energy, which is like bills for the house, and then also gas prices and shit. So those two are the biggest costs. So sometimes they just like take them out of the equation. They'll be like, oh, core CPI came out very positive. It's like, bro, what about the shit that we actually spend money on? So a headline CPI to me seems a bit more accurate, but even CPI and some of those key metrics are a bit outdated. That's why the Fed's using PCE, which is it's consumer expenditures. I think it's personal consumption expenditures. I think that's what PCE stands for. It's a more accurate measure of inflation. And then employment claims, not too off. This is actually the first time I've ever seen them be this accurate. Employment claims is the amount of individuals that have filed for unemployment insurance last month. for the first time. That's insane. We have the Bank of Japan outlook report and the monetary policy statement. These I'm actually going to be spending a lot of time today reading through to better understand their perspective. Big thing I forgot to tell you guys yesterday, big news event that happened was the market was expecting a 4%, or they were expecting a 75 basis point hike for the Canadian central bank. Canada came up with a 50 basis point hike, like on some like really pussy shit. So I'm already like, okay, their inflation, what's Canada's inflation rate? Because I want to compare this to the US, because the US, everyone's expecting a 75 basis point hike, which might not be true. And if it's not true, the stock market is going to absolutely fly. If we go to a 50 basis point hike, the markets are going to absolutely fly. It's going to be the bottom of the stock market. This is how important these news events are. It's not like this is the next speech. Everybody is waiting for the Fed meeting to see if they're going to reiterate their perspective of tight monetary policy or whether they're going to change their mind and start to pivot. The pivot means that all markets are going to reverse. Like the dollar is going to crash, stocks will just fucking run to the moon, and crypto is going to run to the moon. And so for Canada to do this, I actually want to really see Canada's inflation rate. But for Canada to do this, it's not out of the question for US to do it as well. Do you guys see what I'm saying? Like nobody expected Canada to go soft. What is Canada's inflation right now? CPI rose 6.9%. Decelerating from 7% gain in August. Okay. Statcan.gc. God, I hate websites I don't know just because I can't really trust the information, but I'm going to give this the benefit of the doubt. Looks like the statistics website for Canada. Take this with a grain of salt. I'm just looking for the inflation number. Okay, 6.9%. So America has around an 8% inflation rate, and we have to continue to get more aggressive so that we can get ahead of this inflation crisis. Canada has a 7% inflation rate, and they just went soft on their rate hike, which I have no idea why they would do. Overall effect on the Canadian pairs, I haven't seen anything too crazy. But I do believe the news was bullish as of yesterday. So this is GBP CAD, bullish as of yesterday. Now we're in a bit of a pullback. Let's look at AUD CAD. AUD CAD, same thing. The news itself was bullish for the currency, and now we're starting to head back down with the trend. So I guess it was a momentary spike. Yo, my bad, guys. Gali, if you're on here, I'm about to get on with the developers after this and see if we can just get on a call instead, just for timing's sake. AUD CAD, CHF. Oh, that's not even a pair. Oh shit. Let's do CAD JPY. So my bad. Bearish for the currency right after the news. Then right now we're starting to have a kind of a pullback to the overall trend. CAD JPY looks really attractive here. Existing trend is bullish. Massive bullish swing up. Measure it from bottom to top. I might have just found a great trade. Double bottom at the 61. Yeah, this is a good trade if I've ever seen one. But 85 pips of risk, but you have to wait for a pullback. Yeah, guys, I really like this trade. This is actually something that I think O would trade. This is the strategy that we teach in the course, people. Like we literally look for the same shit all the time. Massive shift in momentum. Okay, and a rejection, and then a double bottom off the 61. It doesn't get simpler than this. Even better, we have a trend line right here. We get a break of a trend line. We can measure this thing top to bottom. Okay. Oh, it's right here. We have this trend line, bearish trend line coming down. If we break the trend line, we can come back to retest 107.564. So 107.564. This is going to be the perfect trade. Like this, and like that. So overall, I guess it was bullish for the currency. I don't know how you can have weak monetary policy be bullish for the currency. That one's a little bit confusing to me. But by the way, guys, I didn't really answer. I didn't go back to the point that we had earlier on YouTube. Yes, you can buy UJ and you can sell Euro USD. We can buy the WOC since Yadi took it to Poland. But what's wrong with these people, Joe? What? We're in the middle of trading financial markets. My boy talking about, I said, what can we buy to take advantage of the dollar going up? He said, you can buy the WOC now since Yadi took it to Poland. But what the fuck are they talking about, son? How am I supposed to answer any of this? He said, damn, Nas is dropping. Yep. All I'm seeing, all I'm seeing is buys for gold. Let's go take a look at gold real quick, and then we'll hop back onto Nasdaq. Yeah. Some fiend shit. You feel me? I got you. All right. Yo, that's some fiend shit too. All right, let's talk about this real quick. I'm actually bearish on gold. I see this is higher time frame, obviously, but here's the swing high and here is the swing low. So we had a massive drop and then retest. We hit the 88.6 and now we just hit the 78.6. So two things is we either retest the 78 and drop, or honestly, we're just going to get a straight push through and then we can wait for a pullback of the 61 to keep shorting, like a Stairmaster, you know? This is pretty low as of right now. Can you see a pullback from here? For sure. That's why I can see the longs. Like there's a previous area of resistance here. There's a break and retest. But if you see that the trend is going this aggressively bearish, actually, hold on. I'm starting to realize here that we are having a bit of a shift in momentum. So there's the low. We're starting to see higher lows, and we're starting to see higher highs here a little bit. So this could be a potential, like one more move to the upside before we short. Let's count these waves. We have 0, 1, 2, 3, 4, 5, and then sell. This would make a lot more sense. So we might have one more move to the upside before we short, but just based off of the overall trend and the momentum, I can see this thing just like pulling back up for one more time, or like this for the short. The first idea would just try to short right here at this previous area of resistance. And if that fails, then I would just wait for a better opportunity around the 1690. 1690 is the next resistance zone right up here. We'll do 1688 just to be a bit more accurate. I see plenty of support here on gold, but personally, I don't trade gold anymore. I used to trade gold very heavily. If you guys were a chart addict back in 2019, you guys remember I used to only trade gold. And then in 2020, I transitioned over. I started to work on SPX. That was my main pair of interest. After SPX, I've finally settled on Nasdaq, and that's become my go-to day-to-day pair, and I'm sticking to it. Now, I still trade the indices because I love swing trading. Like, I can't tell you guys how much I love having a trade running in the background that I don't have to make any decisions for. Like, that is by far, it's become my favorite way to trade. But I'm also, I have to understand my personality. I'm also a little bit more active. And so I enjoy taking advantage of opportunity whenever it presents itself. Gold had a double top on the daily. So a lot of people are looking to go long up to 1700. Exactly what I meant. Okay, fuck yeah. Alino 98. Good call. Good call. He said Nas is completely dropping. Whoa. Oh, it is. All right, so do you guys see my attitude of, yes, this thing is dropping, but because I trade so often and I trade Nasdaq specifically so often that I'm not panicking over missing a trade. Now, granted, this is a pretty good idea. This was a pretty good trade to take from up here. Now, the thing is that I was going long yesterday. I went long down here at 407, took it all the way up to 640, which is basically like the zone that we've been watching all week. And then I ended up taking partial profits and putting my stops and break even. Then it came back down. So the real selling opportunities was at the 650. There was another selling opportunity here off this minor retest, but I was waiting for another retest this morning. Honestly, you can't wait for retests forever. So that was that's the one thing that I'm responsible for that decision. We had a drop and price came back up to the 61. I was waiting for a deeper pullback. And because I didn't get the deeper pullback, there's no trade for me. So please remember that just because there's an opportunity does not mean that you're obligated to trade. All right. If the market doesn't meet the criteria that you've predetermined in your plan, then you don't have to take an opportunity. For example, right now the market's dropping and we could hit this previous level of resistance here and we could keep dropping. Is this a trade that I should take just because I believe the market's going to keep dropping? The answer is no, because it doesn't fit my risk and reward criteria. Let me show you guys an example. If I entered off of this retest here, off the previous low, my stop loss would have to be above the previous swing high. And then my take profit would have to be at the bottom of the range. Not have to, but is most likely going to be at the bottom of the range, which would make this trade opportunity a 1.2 to 1 risk and reward. Which means if you're risking $100, you're only going to make 120. If you're risking $1,000, you're only going to make 1,200. Now, if there's one thing you guys got to learn about trading is always go for more than what you're risking, because you can lose a bunch of, let's say, a bunch of $100 trades. But if you make a $800 or $900 trade, then that's going to make up for a ton of losers. So risk and reward is a huge, huge, huge piece of your trading, and a 1.2 to 1 R&R, not great odds. Now, let's say I keep the risk relatively the same, but I entered off of the pullback of the bottom of the zone. My risk and reward jumps to double, to 2.5 to 1, which means that if I'm risking $1,000, I should be making $2,500 on this trade. If I'm risking $100, I should be making $250. And then last but not least, if the market actually comes back up to the 78% fib, now we have a 5 to 1 R&R. Granted, if the market does come up here, I would wait for the liquidity grab first, and then I would short off the retest. All right. So for me, getting a prime entry with a 5 to 1 is more important than being in a trade. And so whereas a lot of new traders, you tend to get very emotionally drawn into the fact that like, oh, I missed it. And you keep telling yourself this false narrative of you missed something. All right. If you missed this candle, then what about all these other ones? Did you miss this? Did you miss this? Did you miss every red candle that came into the market? Because if you missed all these, you should be beating yourself up right now. You should be like, damn, I missed so much. Right? They are everywhere. You're always going to be missing moves. Look at this shit. Somebody missed this. Right? And so missing trades is a fallacy. Being patient and not chasing the markets is your strength as a trader. So yeah, that's the psychology of a trader.
Can you repeat what you just said?
Which part? About waiting for the trade?
Yeah, I wanted to write it down. It was very nice.
So new traders are more focused on being in a trade. Professional traders and experienced traders are more focused in finding opportunities that fit our criteria. So my job as a trader is to manage risk and to find opportunities that fit a criteria. Manage risk and find opportunities that fit a criteria. That's my job as a trader. As a gambler, we don't really do that. As a gambler, we just want to be in a trade. As a gambler, we just want to make money. We're not managing risk or thinking about the downside protection. We're only looking at upside opportunity. We're not waiting for all 4 or 5 confirmations to get hit. It's only like 1 or 2 confirmations and no, it's good enough. So if you really want to become a better trader and a more professional trader, the biggest priority is to shift yourself from being a gambler over to being someone who follows a process and who follows a system. All right. Now, when you follow a system that you trust, that's how you can get consistent results. If you guys show up to the markets and you're looking for something different every time, which means like you're too reactionary. So let's say you understand about all this and now you're like, well, you know, here's the low and then here's the high. And like this thing could actually retrace from here because this is the 78% fib. And oh my God, there's a divergence on the RSI and you're trying to be too predictive and reactive without a predetermined strategy. My predetermined strategy is basically wait for price to hit a daily zone, wait for price to reject off the daily zone. Once it violates certain key levels, wait for a pullback and then short it. Okay. That's my overall idea. Now, before I'd be like, oh, why don't I just buy it up during the pullback? Oh, why don't I just try and re-enter all the way down? Oh, why don't I try to guess the shorts on the way up? Those were all the beginner mistakes I used to make. I don't do that shit anymore because I've lost so much money taking 30 trades here and then fucking 5 trades here trying to guess it and then 4 trades here and then losing on the way down, that I understand that my job as a trader is strictly dependent on how much I can keep myself disciplined to only taking that trade, right? Or this one ideally, but we don't always catch the big one. So for now, we've already had the bearish push. Now I'm waiting for the pullback, and then upon the pullback, I'll be able to short this thing and live my best life. How do you know if you should enter the fib or wait for liquidity? You got to be able to understand candlestick reversal formations. So one part that people skip over, and again, this is a shameless plug because this is hosted by Chart Addicts. By the way, new coaching program. If you guys want to work with me personally to improve your trading, I'm only accepting one more student. I have 1 spot left for November. It could be you. It's $500 for 3 60-minute sessions that could change your life. So if you guys are interested in personal coaching, head over to chartaddictsfx.com to work with myself personally or with our team of coaches. But I got on here. I want to show you guys something real quick. Let's go to courses, log in real quick, hit a quick login. Let's take a look at this. Here's the very bottom. Here's the top. We've already had an 80% correction right here. So this is the perfect place for price to come up to. Now, if price can't break above the 60% Fibonacci, we can actually short from here. So I'm going to be monitoring this zone. And so we're going to have to kind of do the 2.5 to 1 R&R just to kind of keep you guys aware. And by the way, when I'm working on my computer, this is basically what I'll do is I'll be on different tabs. So for example, I'll already have my idea, my trade idea lined up right here. I'll be on these different tabs and I'll just hop on every once in a while, like every 10 or 15 minutes to be like, okay, has price pulled back to the zone yet or no? Has price pulled back to the zone yet or no? I want price to close bearish like this and then to pull back. If we close with a giant wick, and so it looks like this, for example, then I'm going to have to wait another candle. So if it closes like this, that means that we probably have a bit more room to the upside to test before we drop. But if we close with the bearish candle like this, then the next one that pulls up to 387 or 390, that's going to be our short opportunity. So I just wanted to remind you guys of that before we hopped over to this section. So for the courses on the website, we have courses for beginners, intermediate, and advanced. In the beginners course, this is probably one of the best pieces of work I think I've ever put together ever. We have a textbook on here that's very impressive, but this to me is just like the most clear-cut guide for anyone who wants to make money trading. So we have intro to price charts, and then we have intro to candlesticks. This intro to candlesticks video, God, if it's going to load. That's what I get for trying to stream and do all this stuff at the same time. He said videos 5 through 9 are key. They're absolutely like cheat code. But let's go to intro to candlesticks. I want to show you guys all the different facets of how to understand a reversal. Everyone's always asking me, well, Roy, do I just enter off the fib? Do I just enter the supply zone? I'm like, well, it's very clear to me that you have skipped over a very important part of trading, which is understanding the basics of candles. Not just like having the candlestick reversal patterns up on your wall, but actually understanding what the candles mean when they're forming. So we go through everything in this course, which is basically like how candles look on the higher time frame versus how they translate to the smaller time frames. We talk about the volume of candlesticks and what that indicates about price. I talk about how candlesticks actually form, like within a candlestick, how does price form within the hour? Prices go up, they go down, and this is how it ends up looking like in a candlestick format. So we explain the highs, lows, open and close. We look at the candlesticks in the live environment, and then we look at some of my favorite reversal patterns. So the anatomy of the candles, the size of the candles, the volume, this is everything about candlesticks. Now, if you guys are looking at any of this information and you're like, well, I'm pretty good at like those two things, but I'm not really good at identifying them in the open market. I'm not good at understanding the volume of the candlesticks. I'm not good at understanding what, the wicks mean to each direction and what that indicates about price. it means that you guys have skipped over a very important part, and you should probably go back and do some more education before continuing to trade. Alrighty? Very big key. Also, today's going to be a very slow market moving day. And so I'm most likely not going to stay here until 11 to live trade. Most likely what I'll do is I'm going to show you guys all the levels before we hop off and allow you guys to make your own decisions about what to enter. So for Nasdaq, we've already had this drop off the daily, or sorry, I measured it from the very bottom of this move to the top. We already rejected the 88.6 and the 78.6 fib. And so now we're kind of sitting above the 78, which means that we have a little bit more room to the upside. When you close below the 80 fib or right at the 80 fib, chances are you're not going to get a pullback. Chances are you're going to get a little minor test, and then it's going to keep dropping. So for price to be respecting both of these fibs, it means that we have a bit more room to the upside. So that's why patience is going to pay. If you know the market's coming back up for a pullback, a lot of people try to short too soon. And this is where most of us get burned. So if we can wait long enough for price to get up here, go flat, maybe wick inside, and then close back under, we can short the retest. Is everybody clear on Nasdaq before we head off this call? Do you guys know the levels that we're watching and which candlesticks to wait for? All right. If it consolidates here for a little bit and there's no rejections, it's like hugging the price. If it's hugging the price, you don't want to enter these shorts. There's not enough of a rejection there to show the bearish intent. But if the market gets here and consolidates a little bit, you see a liquidity grab through and a drop, that retest is yours. So those two entries. The market goes sideways, liquidity grabs and drops, and you can catch the retest. Or the market comes up, immediately breaks through, and then closes under. If it closes under, then you can just wait for a retest and drop. It all goes back to wait for the liquidity grab. Wait for the stop hunt, people. How many of you guys have ever been caught in a stop hunt? Put a 1 in the chat if you've ever been caught in a stop hunt. Almost everybody. If you traded a major currency, or if you traded even the exotics or the indices, you have been caught in some kind of liquidity grab where the market will come up and grab your entry or your stop loss before it inevitably continues to the downside. And so if this happens as a regular part of market momentum or market action, why wouldn't you just wait for it to happen? Why wouldn't you just wait at the zone for everyone to lose their money? And then once the market has confirmed the direction, then jump in. Isn't that a crazy concept? And the reason I'm just like kind of spoil the fun on whack like that. I'm just going to answer it for you. The reason you're not doing it is because I'm going to wait. Yeah, I want to see one of these answers. You guys are going crazy in the chats. No. The reason is because you want to make money more than you want to follow your plan. If you're always focused on the next trade, 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 you're like, dude, I'm going to miss it. I need to jump in right now. I can't wait for a liquidity grab. I have to jump in right now. And so this FOMO is the main reason why people make irresponsible choices in their trading. Yeah, you're allowing the fear of missing out on something to get you into low quality trades. All right, price is actually pulling up right now. We're at a pretty good zone here for a pullback. However, I know Nasdaq is my baby. I'm going to give this just a second to see if this thing rejects. All right, if we get this rejection, I'll be taking this short opportunity. However, for some reason, I can see us closing back above the zone, coming back up to the 88 fib, and that's going to be where the short opportunity is. So I'm going to give this just a second. Do not enter yet. This is the whole beauty of patience pays. All right, no rejection, no entry. You guys see me, you guys hear me say all this cliche shit all the time. What does it actually mean? This is how it looks in practice. It's at the zone, it's doing everything we want it to, but the momentum is still very aggressive. And we still don't have a rejection yet. So I'm gonna give it 1 second. If we close above the 61, guys, we have a ton of room to the upside. Now look at this, how it looks on the higher time frames. You would have had a massive bullish swing. Here's the low, a higher high, and a higher low. This thing has one more touch before it drops. However, I don't think that's going to happen. I don't think we'll end up closing above the 61. I'll be on the smaller time frames here looking for this rejection. So 15 minutes left of that candle. No real rejection from what I can see. Still looks a bit aggressive, but we did close below the previous candlesticks, which is important. And if we go over here to the 5-minute and just fib this from bottom to top, we're at the 78% fib. Still about a 2.2 to 1 R&R. Still makes sense. But let's give it a second and see if it closes below or above. Then we can take a short together. All right, big piece for you guys, especially Chart Addicts members. When we're looking at higher time frames and we start to scale in, I'm always keeping the higher time frame picture in mind when I'm trading on the 15-minute. So we talked about at the very beginning of the stream about being too focused on the local time frame. So over here, I am very focused on the local. However, it's based on the higher time frame zones. So I hope that concept makes sense. They're not supposed to conflict with each other. They are supposed to support each other. So now that I have like a 5-minute fib on here, it's not supposed to conflict with the higher time frame fib. This green level right here, this green zone that you guys see, this is my higher time frame, and I'll even make it a bit bigger than the other fib, just so we can keep in mind. All right, beautiful. This is why patience pays. The first idea I had this week, by the way, just kind of in context of the news, is I was thinking that the market is going to continue bullish this week to kind of fake everybody into thinking the markets are recovering and to make everybody think that the markets are going to pivot or the Fed is going to pivot next week. And then all of a sudden at the news event for the Fed, it's going to spike up bullish. And then right after it's going to crash. So ideally, that's what I thought was going to happen. But we're starting to have a bit of a turnaround early. So we got to be adaptable as traders. A lot of people are like, Roy, you said that the dollar was going to do this and do that, and you should stick to what you're doing. I'm going to let you guys in on a secret. If you're wrong and you just stay wrong, that's not good. That's not what trading is. That doesn't make you smarter. That doesn't make you superior or morally, righteous. I have a lot of people tell me, Roy, you said that Bitcoin was going to do this and that. People, the world changes every single day. The Federal Reserve, they might come out and throw a wrench in our entire plan on Tuesday. I am adaptable. That's the thing I pride myself on the most, is being adaptable enough that even if I'm wrong on a specific idea for fundamentals, I'm able to read the data and to be able to adjust pretty quickly. All right, we got a bit of a rejection here at the 78. This is a bit of a risky trade. However, might be worth pulling the trigger on since we're all out here together. So I'm going to take a short position here on NAS. And what I do is I like to scale in. So I'm not going to enter the full standard. What I'm going to do is I'm going to enter half a standard here with my stops above the highs at 422. I'll do 420 just for fun. And give it 1 second. Right before I enter, I want to give this thing 1 second. This could be the difference between making money and losing money. Is right before you're about to pull the trigger, take a quick second and ask yourself, is this trade idea still valid? And am I willing to lose money on this trade if it's not valid? Right now, it looks like we're still kind of pushing through the 78. I'm going to give it 1 second. Because imagine we just entered right here and then the market just starts to shift and run to the upside. We don't necessarily want to be taking those kinds of gambles. I'd much rather wait for the market to tell me. It really looks like this thing might shift bullish. It's kind of crazy to say. Not shift bullish as if it wasn't bullish the whole week, but this is just sort of like we're closing back above this major support level, which would indicate that there's a lot of room to the upside. This would be like, if it closes above the 61, it's like this. All right, so very, very different trade than what we're looking at now. That's why I'm being a little bit more patient in my entry. All right, so I'll do this trade, honestly. That trade seems like it makes a lot more sense. Let me see who has some questions here. I missed a couple of minutes. Are you selling already? No, not yet. I'm still waiting for this. Patience will save you a ton on losses. He said VIX is still moving down, which I don't really understand. I actually don't believe that volatility is less than it was last week. Once 11,600 is broken, I feel like we can get a bigger push to the upside on NAS. Where's 600? Oh, for sure. Bro, if we break 600, we have a lot of room to the upside, at least until next week, until the market kind of wakes up to the Fed meeting. All right, it looks like price is having a little bit of trouble at the 78 fib here. We got about 8 minutes left in this candle. So if the 15-minute candle closes below the 78, then I'll take a short position. I'll start to scale in. If it closes above, then we have a lot of room to the upside here. And by the way, this is what the market makers want. The market makers want folks to be looking at this wick, looking at this giant wick and thinking, damn, the market's going to fly. But they also want people to look at there's bearish momentum and to start selling here. So that's why I'm always a bit more patient in these scenarios, because you kind of have to let the market finish shaking out first before you're really, really ready to take a trade. So like, for example, right now, price is sitting right at the lower time frame 78. So this could be a great opportunity, or it could just be loading up a bunch of sellers for it to launch to the upside. So it could just be trapping. So I want to wait a little bit and just see if the closure is there. If we get a closure below, then I'm going to enter the trade. Or matter of fact, if the trade looks like this, might just start to scale in now. So about 60 points of risk, 200 points to the downside. It's about a 3-to-1 risk to reward. 3-to-1 R&R, 60-point risk. So it looks like a great trade to me. All right, I'm going to scale in. I'll take the chance. Ooh, bro. All right, so if you enter this trade, accept the risk, understand where we are in the big picture, and understand that the market could continue to the upside here based off this 4 hours. We're taking a bit of an early entry just based off of the lower time frame rejections and just based on where price is. Because if we wait a little bit longer, the risk and reward is only going to get worse and worse. So if we wait for it to break under, the risk and reward is going to be less than 2-to-1. If we enter here, we at least still have that 3.5-to-1. So although it's a bit riskier because we haven't gotten a rejection yet, which just inherently makes this a bit more risky than waiting for the rejection, we also have a great risk and reward on this. So if we do lose, at least it'll be worthwhile because the area that we entered was high opportunity. So now it's just about patience, watching grass grow. And why do you choose to trade NAS and not US 30? US 30 is just too volatile for me. He said VIX and Nasdaq moving down. Let's hope so. If everyone's wondering what the VIX is a volatility index. Basically just shows how shaky the markets are. And since volatility is very important for traders because we're basically just slaves to volatility. Volatility being reduced since mid-October. This is a bit strange, but you guys know what the VIX looks like? The VIX looks exactly like the dollar. Look at this. Here's the DXY. And there's the VIX. Well, actually, I can probably just put them side by side. Okay, what the fuck? That's not helpful at all. All right, yeah, I'm not going to be able to compare these two symbols, but basically it just looks like the dollar is dropping and so is the VIX. Huh. Pretty interesting. If the dollar is dropping, technically stocks should go bullish. If we're just being honest here. So that's why, like, this short-term move to the downside, back down to the black line, this could be short-lived. Like, I do see, as the dollar continues to drop, people are going to start to buy up stocks because the money has to go somewhere. And that could be what we're seeing. The dollar is crashing. And maybe stocks were just doing a giant fake out yesterday or this morning and are ready to go back bullish. So we'll give it a sec. We'll see how price reacts. We've hit the 88.6 fib. So now it's just, this is the moment of truth. We're either going to reject the 88 and then make a drop to the downside, or this thing is going to fill and we'll just close the trade. So far, not looking too hot, people. We're closing above the 78 fib and we're starting to build support there. That's not what you want to see. All right, this is basically just a patience game. Ladies and gentlemen, do you guys have any questions, comments, concerns before we hop off? If this is your first time on these calls, it's great to meet you guys. My name is Roy Dunya. I'm the co-founder of Chart Addicts. We're a personal coaching and an education service for traders worldwide. You guys can head over to our website at chartaddictsfx.com. It's only $59 a month to get access to calls like this every single day. We also do post-market analysis at 7 p.m. Eastern time every day. If you're interested in personal coaching, you can either work with myself personally. I'm only taking on one more student for November, so honestly, I don't think that those spots are available. And then you can work with our other coaches to be able to work personally on your issues and on anything that you might need to improve on in your trading. So chartaddictsfx.com hosting the stream. It's great to see all of you guys on this call. I'll be holding this and I'll be updating you guys on the Chart Addicts Discord about this trade. Is the event at 10:30 going to have any effect on the DXY? What event at 10:30? Am I tripping? DXY to 109.5 demand zone. Yep. It's dropping, guys. It's dropping. I'm telling you. If we break that 109.5, like I'm gonna have to rethink my fundamental bias, or I was right the whole time and the markets are faking everybody out before the Fed meeting next week. Guys, Jerome Powell is not going to change his mind. Like everybody thinks that he is. Look, Jerome Powell historically, whenever emergencies happened, he prints the money. So he kind of has a reputation of having weak character, and people are thinking that he's going to keep that weak character this whole time, and he's not gonna crash the markets. He doesn't give a shit about the markets. He does to an extent, but not as much as people think he does. So he doesn't have a problem crashing the markets or the economy in order to save inflation or in order to stop inflation. So I think that he's going to reiterate the tough rhetoric next week, and that we're going to continue moving bullish on the dollar next week. People, I'm really not liking the way this trade looks. I'll be honest. I'm about to close out and just re-enter later. Price is forming support at the 78 fib and it's closing above the 88. That's not what you want to see. We want to see a closure below. So right now I'm thinking that this trade is going to keep flying to the upside. And so I'm going to limit my risk by closing one of my positions. So I basically just cut my risk in half. And I'll leave another one of the positions open just in case. But yeah, the way that this thing is building above these fib levels does not look encouraging to me. All right, so the next level to watch for would be the 470. And then after 470, if it breaks that, this thing is back bullish. All righty. Questions, comments, concerns, are we good? YouTube, is great to see you guys again. My name is Roy Jr., co-founder, Chart Addicts, the #1 personal coaching platform in the world for traders. We look forward to working with you guys. ChartAddictsFX.com is how you can find us. And I'll catch you guys on the next Thursday live stream. Take it easy. Peace.